What's going on, guys? In this video, I'll be breaking down this trade I took on Friday and how I'm able to find trades like this every single day. So the first thing I do is I go to the daily chart and I work my way down. That's called top-down analysis. So I go from the highest point time frame and I just work my way down just to kind of try to find what I'm looking for the day and to try to find proper structure in the market. So I go to the daily and I notice that market's been in an uptrend, but lately it's just been consolidating. It hasn't really been moving for these past couple days. So then I'll go to the 4 hour and see where we're at. And then I pretty much see the same thing. So when I look at the daily and 4 hour, these are my main time frames. And these time frames, they help me find the overall structure of the market. So that way I know the direction I'm trading for the day. Now, on the daily and 4 hour, I'm not really seeing much movement. So I'm seeing markets consolidating, or in other words, it's moving sideways. So I'll go to the 1 hour and I'll just work my way down. Since market's consolidating, I'm able to find a buy or a sell, which is it's a beautiful thing because then you basically have two ways to go. You just have to find the best area or the best confluence for your trade. Now, I found a lot more confluence for buys, even if market's moving sideways. So I started looking for those buy setups on these lower time frames. So overall, first thing, find a bias. So my bias is I'm looking for longs and then try to find areas of confluence. Now, what I mean by that is just multiple reasons why you should be in a trade. So the first thing I did was I did my top-down analysis. I found that the longs are in my favor. So let me go to the lower time frames. And then now that I'm on the lower time frames, I see that my areas of confluences are coming together. Now, I trade a strategy called the shark fin strategy. If you don't know anything about that, or if you want to learn more about that, go to my previous videos or stay tuned. I'll be breaking it down in this video as well. Now, I use what's called the TDI or the Traders Dynamic Index. It's basically a mixture of two indicators. It's the RSI and then also Bollinger Bands. Now, what I look for on this with this particular indicator is when the RSI is completely oversold or overbought, and it's also breaching the Bollinger Bands. But it's not only when it goes outside of the Bollinger Bands, it has to be below one or the other level, which would be the 75 or the 25 level. Now, this is very important because it kind of gives me that extra confluence that market is starting to become oversold or overbought and letting me know that there could be a potential reversal. So that's exactly what I look for when I'm looking at this Traders Dynamic Index or the RSI with the Bollinger Bands. If you want to know my the settings for this indicator, please feel free to join my free Discord, and I posted the settings there, or you can just ask me and I'll send them to you. Now, what I look for on the chart is for these moving averages. So I have the 200 moving average, the 50 moving average, and the 800 moving average. Now, you can also see the settings for those in my Discord. So all you got to do is join my free Discord for you to find that setup. And then, of course, you also can see that I have Bollinger Bands on the chart, but these aren't your average, ordinary Bollinger Bands. These Bollinger Bands have specific settings. So you also need to join my free Discord for that. But I'll be going over that as well. Now, these Bollinger Bands, as you can see, the reason why they're Bollinger Bands is because they're literally like rubber bands in the market. And just like a rubber band has to kind of retract, it also has to come back, just like a rubber band does. So when market starts to tighten, that's basically when rubber band is as loose as possible. And what it does is it has what's called deviations, and these deviations, they count as percentages in the market. So the first one, the tightest one would be the 2%. The middle one would be 2.5%, and then the last one would be 3%. Now, the reason why they go by percentages is because it's letting you know that there is a percentage or that the market will reverse. So The closer it gets to the percentage, so if it gets to the 2%, it has a 2% chance of market reversing. And then the deeper it gets into the percentages, the 2.5, the 3%, it's letting you know that it's increasing the odds of market continuing to go into that direction. But once we get a pullback, once we get a retracement, then we're looking at market completely reversing. So it's no longer so say it's touching the 3%. If it comes back into 2.5, it's most likely going to go into the 2% and then so on. So it's giving you more chances, more odds of market going in your favor if these percentages are hit. Now, like I said, back to confluence, because this is exactly what I look for in a trade, is the areas of interest, the reasons why I should be in the trade to begin with. Now, in this, I'm going to break it down in this little chat bubble here. So in this trade, what I can see is the RSI is outside of the Bollinger Bands. So the RSI is outside of the Bollinger Bands. It's also below the 25 level. Okay, so that's two confluence right there. There's two reasons why I should be in this trade. I also want to look at the Bollinger Bands that I just explained. So we also have a touch of the third Bollinger Band, or the 3.0 deviation. So 3.0 deviation. Right? So and then we also have the 800 moving average. Okay. But if you notice, at the point it touched the 3.0 deviation, we didn't really get the rejection that we were hoping for. Now I'm going to show you exactly why. Now, if you notice, once we got the touch of the 3.0 deviation, we got the push. We also have the TDI to confirm that the push is valid. So we got the outside of the Bollinger Bands, we have the outside of the 25 level. We also have the entering back into the Bollinger Bands. But if you notice, market didn't keep going. We had some rejections here, most likely at previous structure. So let me draw that up real fast right here. Okay. So we had a rejection here at previous support, term resistance, and we're getting a push back down. Now, this is my bread and butter. This is exactly what I look for when trying to find an entry. So we got the 3.0 deviation touch. We have the RSI, everything's in place. But market, what it's about to do, it's about to turn divergence. And what that means is basically when the RSI is continuing to go up while market's going down. So this is how I find an entry. So once we get a touch of that 3.0 deviation, you notice that the bands start to spread. But then once we get the rejection, once we start getting pulled back, the Bollinger Bands start to flatten. So that's exactly what I'm looking for. I'm looking for the market to these Bollinger Bands to start to flatten and also meet the 800 moving average. So my entry, I want it to be off that 3.0 deviation, and I also want the market to touch that moving average as well. So we're looking for the 800 moving average. We're also looking for another touch of that 3.0 deviation, and it's also going to be previous support. So as you can see, market had created resistance, then broke, retest support. So this is also going to be a major level of structure. So we're also going to be looking at structure here. All right. And then, like I said, we're also going to be looking for market to turn divergence. So, like I said, it's when the TDI is outside of the Bollinger Bands, it's below the 25 level, it's going down or going up or oversold or overbought, and then market's continuing to go against it. So the TDI is obviously oversold. Why is market, is oversold and it's starting to go into the buying position? Why is market still going down? It's because it's turning divergence. So we're going to let this play so you guys can see exactly what I'm talking about. Markets broke, support, created resistance again. So now we have, look at that. So now this is exactly what I look for. I want the market to turn divergence. We also got the reaction off the, you notice that we didn't get the reaction off the 800 moving average. This was just used as another level of confluence. But we got the reaction at the 3.0 deviation. Look at that. So right, almost exactly at that 3.0 deviation while the bands started to tighten. So this is what I look for. I want the bands to come together because then it's giving us that another level of confluence, letting us know that market's most likely going to reverse. I'll let it play. Boom. So we went straight to TP almost instantly. So this is a 15-minute chart. It took us about 45 minutes to an hour to clear this trade. So my sessions usually last that long. We're usually inside of a trade. If anything, I get off the call and I let the trades run and I update my Discord to let you guys know what we're going to do next. But long story short, these trades usually go straight to TP almost during the call or almost a little after the call that I do every single morning. Now, real quick, I'm just gonna do a brief breakdown so that way we can end the call. So what we had the RSI was outside of the Bollinger Bands, okay? It was below the 25 level. Those are two very, these things, they go together. So without one or the other, it doesn't work, okay? So the RSI is outside of the Bollinger Bands. It's below the 25 level. We also have the 3.0 deviation Bollinger Band, right? We have the 800 moving average. We have structure, so we have support. Actually, I can actually bring this down right there to that actual support at the 800 moving average. So this was almost to a T. There was no way this trade was not going to work out. And then we also have market turning divergence. So we also have market going down while the RSI is going up. So this is what I was talking about when I look for points of confluence or reasons to take a trade. So I have 1, 2, 3, 4, 5, 6 different reasons to take this trade. And that pretty much sums up how I'm able to scalp the market every single day. And real quick, I want to do one more breakdown before I end this video. I'm gonna actually remove everything so you guys can see better. And then I'm gonna go to the 5-minute chart. I actually called this trade right before I took the trade I just broke down. And it's almost exactly the same thing. Same everything, same method, same approach. Now, if you look here, right, we have structure. So I'm going to draw it to there because this was prior to all this happening. I'm actually going to reverse the market so you guys can see. Okay. So I took this trade right before I called the that long position. And I have these trades in my Discord. So if you want to see them and you want to see the breakdown, feel free to join my Discord. I'll be posting the link in the description. So as you can see, we have shark fin. So it's I call these failed shark fins. So it's when a shark fin forms, but it doesn't give us the reaction that we're looking for. Okay, so we have a failed shark fin here off a moving average. So it's very important because it did reject the moving average, the 200. But market failed to continue to drop from this point, and we had a rejection at the 50 moving average. As you can see, the RSI was outside of the Bollinger Bands. It was above the 75 level, but then we got to pull right back to structure, right? And it created market turn divergence at this point. So when market turn divergence, right? Little to no drawdown, guys. I go for 1 to 4s, 1 to 5 with these trades. Sometimes, you know, they're 1 to 2s, or I cut them early because there's confluence against us. But I try to look for these trades to normally push a 1 to 3 or 1 to 4. Now, market turn divergence, right? We also got the rejection at the moving average. So that was an area of confluence, but look where we got our entry. We got our entry right at previous structure and right at that 3.0 deviation. Okay. So we got the 200 moving average. We got the 200 moving average, market, turn divergence. We got structure, right? We got the 3.0 deviation. We got RSI over bought or above 75 level and outside of the Bollinger Bands, right? So this is 1, 2, 3, 4, 5, 6 reasons why I should take this trade. So I'm gonna let it play so you guys can see how this works. Almost look at that. Not there was no and this is on a 5-minute chart. So this was almost instant. We got all the areas of confluence. We got everything set up perfectly. This is exactly what I look for when looking for a scalp trade. You just because you're ping-ponging the market or you're in and out of trades does not mean that you can't find solid setups on a lower time frame. Now, like I said, the most important thing is do your top-down analysis. Start on the 4-hour and daily so you can find overall structure in the market and then work your way down because you definitely don't want to get caught up in trying to be in an overbought market that is overall bullish because market could form these exact points of confluence and then continue to go against you. So it happens. There's no foolproof strategy. There's no 100% win rate, but you definitely can fix your win rate and maximize your potential with this particular strategy. So guys, I hope you like this video. Please like, share, subscribe, and feel free again to join my free Discord. I'll post the link in the description below. And I want you guys to have a wonderful day and understand that you can be profitable in these markets. You can win. You just have to have reasons to win. You have to have reasons to be in a trade, and you have to have a strategy to approach the market. You can't just be in the market. You have to have something to have your back. Okay. Thank you, God. Thank you guys for everybody who hopped on. I appreciate everybody for watching this video. All glory to Jesus Christ. Have a good day. Peace out, guys.